Welcome to the Media CFO podcast, the show where we talk to people on the front lines of finance, business affairs, legal, and strategy in the media and entertainment industry. I'm your host, Tobias Jaeger, and when I'm not hosting this podcast, I'm the CFO of television and content studio Colibri Studios in London. Today we're joined by Lorraine Ruckstuhl, head of TMT at Barclays in London. Lorraine and her team are working with clients in television and film production, broadcasting and publishing, as well as live and recorded music, covering their clients' corporate finance as well as project finance needs. Lorraine started her career in banking more than 20 years ago and joined Barclays in 2005. Recently, her team made headlines again by renewing their £100 million UK SVOD fund and upping it to £200 million. Lorraine, welcome to the program.
Thank you.
Such a pleasure to have you.
Oh, it's a pleasure to be here.
And I'm very looking forward to this conversation because I have a lot of questions. And as a former investment banker, I'm obviously very excited to talk to a current investment banker in the media space. But before we dive into that, I would love to know a little bit more about your personal journey, how you got here, how you got into banking, and then you kind of went into the dark side of doing media banking. How did you get started?
So I kind of fell into banking, which actually is the way a lot of people end up in banking. I finished university. I originally wanted to join the Foreign Office, not realising quite how difficult it was to join the Foreign Office.
Yeah, wow.
So I was a little bit kind of, I'm not sure what I want to do now. And a friend of mine suggested that I might want to try finance. I kind of thought, that wasn't really for me, but
Interesting.
He was kind of like, try it, see what you think. So I originally joined Barclays on its graduate program.
Yeah.
After spending a year in recruitment before that, while I was working out what to do. And then, so I haven't been in Barclays the whole time. So I came through Barclays graduate program. Then, like a lot of graduates, I got itchy feet. And I went to work for a Canadian bank called Scotia Capital. And that's where I first came across media. So media and publishing. I was working out of the London office, but it was the late 90s, early 2000s, and there was a lot happening within the sector. Yeah. And I got involved in a number of interesting transactions, and that's when I became a relationship director, working directly with clients, looking at debt finance and other funding options. And then after a while doing that, I got poached back by Barclays to do acquisition finance, debt finance, across a number of sectors. But because I'd worked in media, I ended up, again, looking at more media deals. One of my favourite early ones that I looked at was when Entertainment One bought Contender back in the probably must have been about when would it have been? The early 2000s, maybe.
Yeah, the heydays.
The heydays, when they didn't realise Peppa Pig was such an asset as it is now. Yep. And so I continued doing that until a leadership job came up in our technology, media and telecoms team. So I've been doing that role for almost 9 years now.
Yeah, wow.
But it's changed so much in that time that it feels like a completely different role, and the media sector's evolved quite a lot in that time as well. Yeah,
and I think also a surge of the tech side of media. It must have been quite interesting to see that come, or people coming to you with more deals in that space.
Definitely, I think people used to be of the view that tech and media were completely separate, and in some ways they are, but actually they're quite aligned as well. And over the years, they've become even more aligned in terms of, the way people watch media and tech and telcos and data and everything else. It's all started to come together, and really, it's interesting to see that that convergence between the different sectors.
Yeah. So when you started with the Canadian bank, I'm assuming this was also here in London.
It was, yeah.
How did you kind of learn about the media? How did you learn about the business? How did you learn about the media and entertainment side in banking? Was it simply by doing, or
it was predominantly by doing, but also by reading up, looking at different things that are happening in the sector, own personal experience. But yes, a lot of banking actually involves just getting thrown in at the deep end and going from there, really. Yeah. Obviously, the finance stuff you can learn, but the sector piece of it you do learn by the more businesses that you look at. And I think certainly in the media space, I think a lot of people who come into that space end up staying in it because it is really interesting and they want to know more about it.
Yeah. Yeah, it seems like because it is also quite an old industry in a way. It's been around for a very long time. There's always this funny mix of folklore, and we've always done it this way, and new rules or options that are in the market to keep track of that.
Yeah. I mean, for Barclays, we've been in the media. We've had a specific media team for over 30 years now.
Wow.
And as a bank, we generally are industry focused, but the media team was the first industry team that we put together.
In the whole bank?
In the whole bank.
Wow.
Yeah.
Okay.
And it was formed in Soho, as you'd expect, in the late 80s, off the back of a lot of BBC deregulation and production financing, and grew from there. But I think having a dedicated team has worked really well for us, and also for clients, because over the years you really get to understand the sector. You understand the clients that are in it, what their challenges are, and also then how you can look at what you do in order to change it and help them.
Yeah. So what would you say from the deals that you did in the beginning versus today? What are some of the similarities and what has changed dramatically from the type of deals you're doing?
I think I've looked at a wide variety of deals, from just general corporate transactions for businesses through to acquisitions, through to production financing. So there's a huge variety. I would say in terms of production financing, I think initially, even sort of 10 years ago, it was a lot of quite vanilla transactions to ITV or overseas broadcasters, but they were quite small and they were quite straightforward. Over the years, those transactions have changed and evolved and become a lot more complex. They've also become bigger in size. So whereas we might have been looking at relatively small loans, less than 10 million, now we'll frequently look at things at 10, 15, 25 million, because the nature of production
per episode.
Absolutely. I mean, the nature of production and production financing, especially probably over the last 2 or 3 years, has just gone crazy in terms of the demand and the higher quality that broadcasters and SVODs want, and therefore the need for producers to create bigger, better quality productions.
Yeah. You mentioned the streamers. How has their surge or rise impacted your work? And how did you make sense of it in the beginning? Obviously, now you have the fund, which we're going to talk about for sure. How did you approach the first transaction with Netflix or Amazon?
Well, it was interesting. I mean, I think this is where understanding the industry and talking to your clients really helps, because we were talking to clients probably 2 or 3 years before we actually saw a Netflix deal about the fact that Netflix were in the market, they were doing things differently, they weren't necessarily paying on demand. And so we spent a lot of time kind of going, well, how can we structure it? What products have we got that we can change around so that it can work? Quite a long time before we actually saw a transaction. So when we finally got one, we're like, great, fantastic, we can see it actually works. And initially what we did was really our traditional loan, but just over a longer tenor. So rather than repayment on delivery, it was a repayment over a 3-year period. Which was fine. That's a traditional loan, but we had to change our own internal policies, because at that point we didn't necessarily, it wasn't agreed practice to go that sort of tenor on a loan for that type of business. So we had to get our own internal approvals. And then obviously, as we've seen more transactions from existing customers and new clients, has been around a lot around the back catalogue and putting together bigger catalogue transactions and again looking over what's the best way to do it. Is it actually through a loan, or is it through what we've called our contract receivables product, where we'll buy the Netflix debt off them at a discount, and then we'll deal directly with Netflix, and the client can actually take that cash and reinvest it in new productions.
Yeah. Was it different for you that Netflix or Amazon are publicly traded companies? There's a lot more access to financial information versus a private buyer that a producer works with? I
think a lot of the buyers that producers work with are quite big companies anyway. Either they're large broadcasters or streamers. So yes, the more public information you have, the better, definitely. I mean, a lot of broadcasters have public ratings, which is helpful. So it was certainly helpful to be able to get that additional information.
Yeah. And how has it changed deals, given the fact that these are US companies, the streamer specifically, versus a national broadcaster or pubcaster that producers in the UK worked with?
Yeah, I think obviously it's getting used to Californian law on some occasions and ensuring that we've got the right team behind us to ensure that although we're dealing with a UK entity at our end, obviously we're dealing with an overseas counterparty and how that works and making sure that works for us. I think that's probably been the hardest bit. Otherwise, I think TV generally has been global in its outlook. You can have quite small producer dealing with HBO or dealing with Nat Geo or anyone else. So we've been used to dealing with US businesses, but probably we've done it more under UK law than US law. So that's
interesting. Yeah. And they were amenable to that because usually they love to enforce their terms.
Well, they're the ones that wanted to do California law, so
I see.
Yeah, so it worked for us as well. So,
on that note, talk to me a little bit about the fund you launched. Obviously, there was great publicity around that, and then, of course, congratulations to the upping, I guess,
yes.
the renewal. How did that come about of creating, I guess, a structured product around that? Was it just the need? Was it that high that you said, okay, let's find a way to make this process more efficient?
Yeah, I think we knew there was a need for it, and we knew that we had the capability and the appetite for it, and therefore by coming up with the fund and looking at the different baskets of risk and going, well, actually, we're happy to do this day one and then see how it goes, and then it was going well, hence we doubled it. But I think the purpose of the fund was really to catch hope. Well, it to be honest, it did better than we thought we would in terms of coverage, which is great. I mean, it really took off, which is what we hoped would happen, but doesn't always happen when a bank puts out a press release. It definitely did better than we thought. But I think what we wanted to do was really get the message out to the market that we're here, we want to lend, we have the appetite, we understand what it is that you need, so come and talk to us. So in that respect, it worked really well because we got quite a lot of reverse inquiries and still continue to. So for us, it's worked brilliantly.
Just to protect you from too many emails, because you're right. Every time in the in the media industry, every time you say someone has a fund, you'll get a lot of inquiries. Talk to us real quick. What is the fund doing, and what is it not doing?
So really, what the fund does is looks at how much is puts a certain aside that we're happy to lend to streamers. I mean, we're willing to talk to pretty much anyone. I think the key is really that you have a signed agreement with one of the streamers. If you kind of come to I guess the biggest misconception with banks is that we do gap financing, we do equity financing, whereas actually we do debt financing. Yeah. So, in that respect, kind of once you've got your production kind of greenlit and you've got a commission, then come and talk to us, even if you're still working out the T's and C's. But, I guess the biggest thing is when you say you've got a fund, people think it's an equity fund, not a debt fund.
Yeah. So how was that process internally? Because obviously a bank as big as Barclays, there is a certain degree of politics and company policies, and my experience is that media and entertainment there is at least one or two areas where it's colliding with existing policies. How did you navigate that process, and how was that?
A lot of it was education. So, I mean, we were lucky that our credit colleagues were on board with what we were looking to do, because with having such a long-established team and a good track record of how we analyse these businesses enabled our credit colleagues to get comfortable that we knew what we were doing, we knew how to analyse the risk. We were coming up with a reasonable structure. However, we did have to go to our credit risk management committee and say, look, this is what we're looking to do. We might have previously lent this amount, but now we want to lend a higher amount. And with, if you don't necessarily understand how production finance works, it is an education process. In some ways, it's not complicated, but it's very much, if you're looking at it from the outside in, it's very much a single debtor risk, which from a bank perspective, to put a large amount of money out on a single debtor repaying you does take an education as to why that works, and the kind of symbiotic relationship between a producer and a broadcaster, insofar as, with a lot of businesses, is the debtor really going to pay up? We found with TV productions that obviously the producer wants to make the right quality product, but so does the broadcaster. So they're involved. They want to make sure it's delivered on time to budget because they've got a gap in their schedule they need to fill. So it's not necessarily the relationship is quite connected between the producer and the broadcaster, which over the years has proved to be the case in terms of ensuring that actually the productions do get made, even if there are hiccups along the way. Whereas that might not always be the case with some sectors.
Yeah. So how long did it take you overall, kind of from start to finish, to set up the fund?
Probably about 6 months.
Oh wow!
Yeah,
that's lightning fast. Yeah,
it was pretty fast. I think because we'd had quite a lot of talks, and we'd kind of evolved the product itself slightly before that, which then enabled us to kind of react quite quickly in getting the fund in place.
And the renewal or the upping of it now, was that complicated, or was that simply just getting another signature from the floor above?
As with everything, there's always committees involved, and we have annual reviews on committees, and so we took the point of which we would do an annual review of it anyway to actually up it at the same time.
Yeah.
Because then there was already a pre-established process. Because the hardest part is getting all the right people in the room that you need to be involved in the decision.
Yeah. Now, when you talk about kind of the life inside the bank, I know from personal experience that there's always some, I guess, misunderstandings of how a bank works and what banks do. Especially, independent film producers are probably the best at finding ways to get something done, which sometimes collides a bit with what you can do as a bank. What do you think are some of the misunderstandings of what a bank does in this industry?
I think the biggest misunderstanding, as I mentioned before, is that difference between what is debt funding and what is equity funding. Because a lot of TV or film producers initially kind of think, well, I've got most of it, so can't you just do that other bit and then that'll make it all work and then all the funds will come back? Yeah. But having to explain that gap piece is equity, it's not debt, is probably the biggest misunderstanding. The other misunderstanding is if you're an independent producer, you can make quick decisions, you can act really quickly. As a financial institution, we're a heavily regulated organisation. Therefore, to do anything, we have a lot of hoops to go through, including know your customer and all the regulatory pieces to get accounts open and get things moving. Now, we work pretty hard to make that as slick a process as we can, but there is still a process. And I think if you're running your own business where you can make quick decisions, understanding the mechanics of a beast like Barclays can be quite hard.
Yeah. Is that something you wish potential clients or maybe also existing clients would keep in mind a little bit more when they want to work with you?
I think once you get to know people, they do, and we try to be really upfront with clients when we're first talking to them about what our processes are, what information we need, roughly how long it takes, so that they can factor it into what they're doing. And also with some businesses where they know that they're going to need a lot of production accounts, we'll try and open some shell accounts beforehand. So we'll try and be proactive and get things. And then they can change the name to whatever production it happens to be. So we'll try and think of ways to make the process more straightforward.
Yeah. With all the activities you described, how does a day in life of Lorraine actually look like? You have so many internal and external stakeholders. I'm guessing no day is alike. But how does it on average look like?
Yeah, you're right. No 2 days are the same. It tends to be a mixture of juggling internal, external, managing my team, meeting clients. Obviously, meeting clients always comes first in my book, and understanding businesses and working with people. That if I have to give anything up, it'll be the internal meetings. I'll kind of push back, not the client, not the client side. Yeah. Though there are times where you just have to do the internal pieces. But it is a mixture of strategy. Around the sector, especially as it is constantly evolving, whereas in some sectors, the standard products and you just continue to use them. What I found certainly over the last 3 or 4 years in the media sector is we're constantly looking at our products, looking at what's happening in the market, and going, okay, now we need to look at this, and okay, we've created contract receivables, but now we need to look at, what else can we do? Can we make the whole process? Can we create some sort of umbrella facility where we can make the legal process quicker? And we're constantly looking at how can we refine and change what we're doing in order to meet the changes in the market. So the strategy piece can be quite high. And then obviously I've got a team of relationship directors who I work with, so it's making sure that they're all right and their clients happy in that side of things. And then client meetings or external events. I was in Belfast this week talking to potential new clients given the rise of the production sector out there. So it's a mixture, but it's fun. I really enjoy it.
So you try to do the impossible every day.
Try to.
Yeah. So what's your personal system to kind of make sure you don't get distracted by like the hands that go up or little fires that somehow happen versus the little more long-term activities you described of thinking about products, for example?
I think you have. I mean, if fire happens, you've got to put it out. So that can often put you on the back foot. But I try and leave one day a week without meetings so that I can use that day to really catch up on anything that I haven't been able to do during the rest of the week. Enables me to kind of, as you say, sit down, think a bit more about where are we on the strategic pieces we're working on. Once a week, I meet with my team and we talk through what's happening in terms of transactions, also talk a bit about strategy, set ourselves sort of goals for what we want to get done by the next week. And so we're actually holding each other to account in terms of what we're trying to achieve and moving it forward.
Yeah. So one sane day a week.
Yeah.
You mentioned working with international clients as well. Obviously, you're based here in London, but a lot of the attention in the industry always goes to Los Angeles because I guess that's where the center of gravity is. How do you manage to stay on top of what's happening being based somewhere else? And how do you make sure you don't get absorbed by the buzz and the noise that's happening there as well?
I think maybe that's where being over here can be helpful in terms of not getting too caught up in the buzz. But we do have colleagues out in New York who go to LA more often than we do. So they'll feed back what's happening on the ground that maybe we should be aware of. Obviously, we have clients that are constantly going backwards and forwards as well. So they can give us the lowdown on what's happening. And occasionally we will go out if there's a good business need and we need to go out there and talk to people, then we will do. But I think, to be honest, the nature of what we do from a finance side, I don't think we need to be in LA to kind of understand what's happening. And people are always, London being such a major centre, you will find all of the major, whether it's film or TV business, have pretty big operations out of London as well. So that enables us to cover the whole market.
How would you say has that changed over the last years with obviously the production landscape as well becoming a lot more global? Have you seen significant changes there?
I think our US colleagues are probably much more interested in what we're doing now, whereas before, I don't mean that in a bad way, just I think in to a certain extent it didn't necessarily, unless you were in LA and doing very specific film financing, a lot of, that wasn't as obvious to our colleagues as perhaps it was to us. Whereas now, because there's been that real shift that obviously film is still really important, but a lot of TV productions are the same size or bigger than a lot of film productions, and the way they're financed is probably more bank friendly than film. I think that's resulted in our colleagues being much more interested and and they're very engaged and really helpful in helping us. Either with contacts we want to make here, we work with them in terms of the relationships they have out of the States. So I'd say from a finance perspective, we've become really joined up, which works really well.
Yeah, I mean, it used to be the case that if you didn't have an address in Los Angeles, you didn't exist.
Yeah,
bit like if you put your name in Google and nothing comes up, you must not be a real person. It's quite interesting because. I think, and I would love to get your take on this, that a lot of the finance aspects of the industry have become a little bit more institutionalized. So while maybe even 10, 15 years ago, everything felt a little bit more once-off, unique deals, things have become a little bit more structured. Do you feel that's the case, or?
I think there is a bit more structuring, probably maybe because of the size. But I think from our perspective, we still try to be bespoke where we need to be. And I think we've got the flexibility within our product range to try and create the right solution for a client. But if there's a number of, I guess, by being more structured enables people to respond more quickly to what's needed. But if you want something a bit more bespoke, obviously, I guess as a producer, that can make it harder. But from our perspective, we try to be flexible where we can.
Yeah. Obviously, producers can be very creative in the way they do business or they structure things. How do you manage to bridge that gap between what you can do based on the products you have and what they need, or how their needs change? You mentioned obviously bank is it's a bit like a big tanker. You can't just suddenly change course, whereas a jet ski can.
Yes, yeah. I think what we try to do is just be really honest, really open, keep a good dialogue going, understand what the challenges are and try and react accordingly. So I think as long as you're open with people and tell them what you can and you can't do from the beginning, and also potentially if we can't do it, who could help you do it, then I think people appreciate that honesty. And I think things can go wrong in production, and I think that's where we have proved ourselves to be flexible in understanding that actually occasionally things do go wrong and you need to alter your terms and change the profile. And we've done that. But by understanding the sector and having a close dialogue with the producers means that if something does happen, we can respond quickly to that, and it's not a surprise. So, for me, as long as you've got good communication, you can bridge that gap between, For us, we don't need to be involved in the whole creative side. They don't need to be involved in the whole finance side. But the key is there's that bit in the middle where we just need to make sure we're talking.
Yeah, that's actually a great argument. Look, I'm not editing your script, so you please don't mess with the numbers here. I want to talk to you about a completely different issue. Obviously, and this is getting discussed, I guess, more and more. There's very few women in leadership position in banks first of all, but also in the media industry, especially on the business side of it. Yeah. How did you experience that discrepancy in your career?
Well, as you pointed out, I work for a bank, so and corporate banking in particular, unfortunately, is still quite male dominated. Yeah. I think it's changing and it's improving. And when I was a graduate, I can't think of a single female that was in a leadership position. Whereas now, I do look around and I see more female counterparties and I see more women in leadership roles. There's still a lot of work to be done. Yeah. But I think I was kind of thinking, from my perspective, what I've always tried to do is do a job that I really like. And if you like your job and you do well, then actually that's probably the best way to get promoted and get into a leadership role if that's what you want. Because ultimately it starts with, do you enjoy what you do? And if you do, then that's the first step. You also need to find good people to work with. I've had some brilliant managers. I've had a couple of not so good managers. And that's when you realise you have to exit yourself from that situation because... We'll
list their names in the credits.
You're never gonna get anywhere without someone who's supportive of you either, and who's going to champion you as much as you champion yourselves. So you do need a little bit of... You need luck or be able to recognise those people who will support and help you, as well as those people who really won't. So I made some tough decisions along the way in terms of leaving roles because I didn't think I was going to get that support, and I needed to go somewhere that I felt that I could grow. So I think you've got to don't be scared to kind of take a sideways move or do something different if you think that in the long run that's going to help your career. But I think the workplace as well needs to change. I think it's become more flexible. It needs to continue to be flexible in the way that it allows its employees to work, and male and female, because I think men and women both want flexibility for whatever reason they want. But the more flexible the workforce can be, the more it encourages everyone to think that they can do every single role. So I've got a 6-year-old daughter, and changes in technology and everything else has made it much easier for me to do my job now than it might have done 20 years ago, in terms of being able to be connected with the office even when I'm not in the office, and
maybe sometimes too much.
Definitely too much sometimes. Sometimes I do have to remember to put the phone away. Yeah. But I think it's finding ways to make people think that actually the nature of it's about what you do and how you approach it, and it's not necessarily as it probably was before, unless you're always seen in this place at this time, then you're not going to get ahead.
Yeah, I never understood the concept of FaceTime. I mean, it's great to be there and as far as just next door to people to come in and ask questions. Yeah. But so is that how you navigated the process? One, by obviously just doing jobs that you like, thus being very good at them, and then hitting the stop loss when you didn't feel you got the support, looking for a different avenue.
Definitely, I think you have to, and because if you're in an environment where you don't think you're going to grow and you're not happy, you're not going to do well. Yeah. So you do have to kind of say, right, what's next? And I'd love to say I had this big long-term vision, but I didn't. But what I did always make sure is that I always enjoyed what I did, and when I felt I was no longer being stretched or enjoying it, that was the time to move on and move to the next job and the next challenge. And if you keep challenging yourself, at some point, I think you probably then end up in that leadership role, because that then becomes the next challenge.
Yeah. Do you think there's anything else besides obviously creating the flexibility for everyone that the banking space or also the media space could do to bring more female leaders forward? Besides getting rid of people that have been in the news often enough for misconduct.
I think people just need. I think the hardest thing to get over, and we're trying to do this in the bank, is that habit of hiring in your own image, in terms of ensuring that during the recruitment process you have different voices being heard about who's the right people to hire, and maybe taking a few more chances on people that don't necessarily have exactly the experience but I think where you unfortunately you can't help that unconscious bias unless you tackle it head on and have different people in the room going, well, yeah, there is that, but what about this? And I'm an R about positive discrimination, but only because you kind of, on one hand, I don't like it. On the other hand, you think it's going to take so long to get any form of equality that you feel that there should be something more. So whilst on one hand I don't agree with positive discrimination, you do feel that it's going to take such a long time to get any form of equality that you at least need to have different voices in the room when hiring decisions are made to make sure that different qualities that candidates have do come out, and it's not just people looking for the same thing all the time, because different people have different things to give. And to be honest, one of the most rewarding teams I worked in was pretty much 50-50 male-female. And
interesting.
Yeah, and it wasn't actually until I left the team that I managed to pinpoint what it was that was so good about it. And actually it was the fact that you were getting all of those different opinions coming through on an equal basis, and actually as a result it was a great atmosphere to work in, and actually we delivered really good results as well. So from my perspective, diversity and bringing more people, more women through into leadership and into all roles is actually good for business as much as anything else.
Yeah, you mentioned going into banking, the graduate program. What do you think What do you think you would be doing if going into banking wasn't an option?
I thought about this. It was an interesting question. So I kind of came up with the two things that came into my head, which was first was a diplomat, which I mentioned before was something I thought about. And then the second would probably be a florist. So totally different. So one quite creative and the other, I probably have developed a lot of the good negotiating skills you probably need to be a diplomat actually through banking. Yeah. But a diplomat or a florist. Interesting.
A florist just because you love flowers and
I love the creation piece that you can have, the fact that you can start with just a bunch of flowers and then you can create something that can be quite beautiful. So it's just and how flowers can make you feel, or how a bouquet of flowers might make you feel when you see them or receive them. So
I mean, it always lifts up the spirits. I mean, it's impossible to have a bad day after somebody gave you a bunch of flowers.
Absolutely.
Especially when they're arranged nicely. On that note, if you had a chance to meet, 20-year-old Lorraine, what would you tell her? Time machine back. You're right there.
I would tell her to believe in herself and to maybe take more chances. And that, don't worry so much. Just, go for it.
It's very interesting because this is a question I ask everyone. And I think that's 90% of the cases that people say, I should have believed in myself more, I should have trusted more, and I should have worried less.
Yes.
But on the other hand, I'm always thinking, yeah, you're right. But worry is, of course, also a motivator or, something that makes you, check again and then maybe find another thing you need to, adjust.
And also maybe change roles maybe a year or so before you actually do.
Oh.
Push yourself that little bit more because you kind of stay, I found that you kind of have maybe stayed in my comfort zone for that little extra period of time, whereas actually you could have probably pushed yourself forward.
Yeah, because I mean, the path you described you had of starting here, then going to another bank, but then coming back. I feel like it's if you were starting today, that's almost people would look at it and like, how come you're just three different like two different organizations in this case.
Yeah,
it's almost en vogue that you have to change jobs every 3-4 years.
Yeah, absolutely.
Like the latest.
Whereas I've probably 5 or 6 years in each role. So I mean, I guess that's the thing about a big organization is you can change the job you do within them, which is probably why people end up staying slightly longer.
Yeah. If someone's listening, interested in going into banking, obviously, especially here, we're not going to show it, but there are a couple others, especially in this little patch of earth here. What do you think is some of the things that distinguishes Barclays or also your team from others that you know?
I think in terms of Barclays as a whole, I think they're a really good employer. They offer a lot of opportunities in terms of different career. You might come in thinking you want one career and end up on a slightly different career. I have friends who came in as graduates with me who didn't end up in corporate banking. They may have ended up in marketing or HR or somewhere else. So I think as a graduate, if you're looking for somewhere to go, it gives you a lot of possibilities if you're not quite sure exactly where you want to be. I think if you're in corporate and you like the media sector, the reason why I would recommend Barclays is the fact that we have a fantastic team of people that are really passionate about what they do, whether it's TV or music or publishing or films. They really love what they do, and and they actually combine the best of understanding banking and how to help clients with a real passion for the sector that they're in as well, which I think it comes across when you talk to clients that you're not just there kind of going, oh, here's some banking products. They're genuinely interested in the sector and the developments and what those businesses are doing. So to be part of that is is quite exciting. We get a lot of graduates come through our team as part of their rotations, and they're always wanting to come back, and we often do get them back, which is great. So which is always a good sign when people do their 2 or 3 rotations and then kind of say, we really want to come back and work with you guys. And I think because we're always developing the product as well, it's quite an exciting place. You're not just doing the same thing, it's changing.
Yeah, speaking of change, what are some of the things you're watching now in terms of trends or things that are changing in the industry?
I think at the moment there's 2 main things. Obviously, continued consolidation of producers and broadcasters, which seems to be never ending. It continues to consolidate. And then the other side obviously has to be the SVODs and the streamers, looking at what Apple's going to do, looking at how Disney Plus and how that's going to, the impact that might have on Netflix. So, and also looking at consumers and their changing habits in terms of how they're consuming content, whether it's on their phone, via a laptop, occasionally on a TV. Yeah. So, just understanding how the impact that can also have on producers and the content that they're making. I think we had one of our clients was making something for Snapchat. And again, so from really long content to also very bite-sized content in terms of just the changing demands of consumers.
Yeah. How do you think that's going to impact your job and the work you're going to do in the next couple of years?
I think we're going to have to continue to be flexible and willing to change in line with how the market changes. But I do think that the one consistent has been around content and delivering good quality content. If you're a producer and you're working with people who have good ideas and come up with good content, the question then is, where do they put it and how do they need it financing? But from our perspective, it's about working with good producers or up and coming producers and working with them to sort of navigate the changing landscape and how we can support them as they do that.
So on the note of making decisions what deals you can and cannot do, how much is that guided by the policies we mentioned? How does the process actually work?
So if a client comes to see us, it depends what they want, whether they want a working capital facility, production financing, term debt. There's a lot of different products, but let's just say they want some form of debt, whether that's a corporate facility or production finance. The most important thing for us is actually the management team who are running the business, how they're running the business, what their background is, how they've come to where they are now, what their track record is, because ultimately it's the management that are going to deliver for you and are going to provide the cash to repay you. So the management team, definitely number one. Secondly, then if you're looking at a production, it's understanding what the nature of that production is. Has it been commissioned? Have they got the cash flow? Who's their production accountant? Understanding, how it's going to work in practice, and what they need from us from a debt perspective. In terms of what we need from them, the other most important thing we need from a business is the cash flow for the production, or if it's a corporate facility, the business as a whole. But having a good and accurate cash flow is really important to enable us to assess the lend and understand what the peaks and troughs are in terms of what they need and when. So that's really important. Then what we do from our perspective, once we get to know the business, understand the management team, understand the nature of what they're doing, where they're going, is we will tend to pull together a paper that we share with our credit colleagues with whatever the request is. And what we need. We then have to go to documentation, which for a production loan is quite straightforward in terms of an agreement between ourselves, the producer, and the counterparty. If it's more against the business, then it will be a standard loan documentation, which may have financial covenants to ensure that we understand how the business is doing, or with a production loan, it's around the cash flow and ensuring that we have the tied repayments back.
Yep. How has that changed over time, and especially with we talked about the streamers. How has that changed in terms of what you need to do for that process?
I think the one change with the streamers is it's longer term lending. So we rather than maybe taking somewhere between 6 and 18 month view on the producer and the counterparty, we're now taking a 3, 4, 5 year and sometimes view, especially on the counterparty. So we need to really understand not only the producer's ability to deliver the content, but we're looking at the longer term ability of the streamer to repay us, which you would go, yeah, but they're all big organisations. But also if you look at Netflix, it's also a very highly levered organisation,
yes.
And is very dependent on new users to continue to be able to fund the development and obviously investment that they're putting into the platform. So it's just from our perspective, it means we need to do that longer term analysis and really keep on top of the counterparty to ensure that we're maintaining an acceptable level of risk.
Yeah. On that note, how does the pricing work for something like that? Obviously, you're not doing this out of goodwill and charity. Is it more of a kind of calculation of all the factors, or based on if it's this, then this, and that, and then that's the final?
Yeah, so it is actually we do actually take into account a number of different factors, especially if we're lending to a special purpose vehicle, which obviously a lot of productions are done through SPVs. We take into account the producer, the amount, the nature of the program. Is what risk there is with the program in terms of is it UK, is it overseas filming, any factors that can go into lengthen the risk of the production. And then we do look at the counterparty as well, and look at the strength of the counterparty and the tenor in which the loan's going to be repaid as well. So we take in, and we actually really bespoked our model last year to actually take into account all of these factors. Before that, it was mainly looking at a bank standard producer customer based risk model, but we felt for production financing in particular it was really important to take into account a number of different factors. So if you're doing a really straightforward studio based 6-month production for ITV, then the cost of financing for that understandably will be lower than for something which is 18-24 months in production, multi-location, dealing with a higher risk counterparty.
So when you go into that process, especially on the corporate facilities side, is there something you observe maybe again and again where you thought in terms of KPI or how the company is managed that there was room for improvement, as if if they just did this and this and this, then it would be so much easier, but it's not how they ran the company. Is there something that would make this process better for companies or easier had they done a certain thing? Is there something like that?
Oh, that's a tricky one. I think for us, it's all about ensuring the financial management of the business, especially if you're running a number of different productions at any one time, and you're looking for something that's more on a corporate basis than a production financing, is having making sure you have a really good back office staff that are ensuring the business runs smoothly while the creatives go out and produce lots of content. Yeah,
because I think that's always one of the challenges, especially if a production company runs multiple productions, that there needs to be enough bodies in the office to to catch all that the information. So on that note, one topic I always find very exciting is valuation. Whether you're looking to sell the company or get an investor, that's one of the most discussed things probably. From a banking perspective, you also, as you said, you want to know who you're talking to. How do you approach this? Because especially for newer companies, it's always very tricky.
Yeah.
Older companies, they might have a catalog. What's your take on that?
So from our perspective, valuations are interesting, and if a company's got a back catalogue of productions, I think that's helpful. But I think from a bank perspective, what we're looking at primarily is cash generation. So we're looking at the ability of that company to generate cash, either to both invest in new productions, but also for a repayment profile if they've gone for a corporate debt option. So it's trying to get the balance between investment and also generating cash for bank facility repayment. So I think a valuation is important if you're selling, but from a finance perspective, it's all about the cash.
No. I mean, valuation, to me, it always sounded a bit like, it's you got to pick a religion and then stick to it, and and then argue that way.
Yeah.
There's so many approaches to coming to a result, and they're usually all very different.
Definitely. and from a bank perspective, we don't really ever want to be in a position where we're having to sell someone's back catalogue. So, we leave that to others.
No. Or, on the opposite side of the spectrum, having a company that, half of their valuation is made up of one children's TV show, which is, of course, very interesting in a story in itself.
Yes.
But how do you feel about that when there is a company that has done really well on one property? I mean, that might still generate cash. Do you feel that's a different situation as if they were doing the same result with 10 shows, for example?
I think from a finance perspective, obviously it's lower risk if you've got multiple shows rather than reliance on one show, because, depending on what the show is, something could happen that could alter the value of that or the ability of that production to go forward. And we've probably seen that a few times over the last few years. So reliance on one thing it does make it harder from a bank perspective than having a number of different programs. So we'll still lend against it, but maybe the amount we can lend is probably slightly lower than if we had multiple productions.
Yeah. So if you had to get your crystal ball out, what do you see happening in the we talked about what's going to happen now and in the next couple months, maybe years. What else do you see kind of as a long-term shift that's happening?
I think a lot will be around consumers and how they want to consume content. And I think it's hard to know exactly how they're going to want to consume content, because 10 years ago, I don't think we would have predicted where we are today. So I'd love to be able to predict the future. But it is really tricky because of that, because I think the two key elements are the key element is what do consumers want, and how technology changes that will influence that. I think there's likely to be further changes around broadcasters and streamers. I think that content, if you create good content, someone will buy it and someone will watch it. So I think probably the most changes are likely to be around the broadcasters and the streamers. That's where I think we'll see the most changes in the next 5-10 years. What that landscape will look like is kind of a little bit harder to tell, but that's where I imagine it won't necessarily be all the same people we're talking about today. Yeah.
Well, I hope we get to speak before that to adjust our predictions. In any case, thank you so much for your time and for joining us. And I'm looking forward to speaking with you about the past, present, and the future next time.
Thank you.
Thank you so much for listening, everyone. We'd love to hear from you now. Please let us know what you think of the show and this episode. Leave us a comment, send us a message or tweet. And we're looking forward to welcoming you on our next episode. By the way, you can follow Media CFO on Twitter, Instagram, and Facebook. And if you haven't already, please subscribe to this podcast on Apple Podcasts and rate and review this podcast. Again, thank you for listening, and bye-bye. The Media CFO podcast is hosted by Tobias Jaeger. Our executive producer is Bridget Scar. Digital editing by Christina Vogt and Athanasios Karakantas. Designed by Daniel Kottis. Many thanks to Anouk van Gemen and Frederick Jaeger for their creative review. The notes for the show can be found on www.themediacfo.com. Copyright 2019 Colibri Studios.